As of April 1st, there's a small tweak in some of the rules regarding FDIC insurance. Not going to impact a lot of people, but it could impact you. What are these changes? I've got that and more coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. FDIC insurance coverage is so critical. It is so critical to our just confidence in our financial system. And you need a smooth functioning, confident financial system in order for the economy to operate the way it's supposed to. I mean, just look at things right before the Great Depression, right? And right now, while we're sort of past what we were going through a year ago, the regional banking crisis, I've said a few times in videos, I don't actually think we're quite past it because the conditions that caused it still exist. They have not been solved yet, and yet FDIC insurance has been able to step in and help all of us feel confident that, okay, as long as I follow the rules, I'm not going to, lose money. My money is guaranteed. It's insured. So what are those rules? They've been changing recently, and it's only going to impact a few people. But those of you that it does impact, it could impact you a lot. And even if you're not in this minority right now, you could be in the future. So let's get into those changes. First, how does FDIC insurance work? Got to explain that before we talk about the little change. Here's how you want FDIC insurance to work. That every account that you have, every bank account that you have, has up to $250,000 of FDIC insurance coverage. That's how you want it to work. That's the limit right now, $250,000. And so, yep, each account has $250,000. That's not actually how it works. That's how you want it to work. That's how you might think it should work. That's not how it works. It's actually a little bit more complicated than that. Generally, FDIC insurance coverage is $250,000 per depositor per bank in each account ownership category. Well, what are those account ownership categories? Going to go through them here in just a second because that is one of the changes. Single, joint, business, trust accounts. We'll get to that here in just a second. So those are the different categories. Let's take a look at a couple examples so that we can see exactly how this works. So here, this example directly from the FDIC website. Marcy Jones has a money market account with 15 grand, has a savings account with 20 grand in it, has a CD with 200,000 and a checking with 25. In total, at that bank, owned individually, she's got 260 grand total as a depositor, just her, okay, at one institution, one bank, whatever this made-up bank is, in one ownership category, just single account. She has more than that 250,000. You can see here in this example, there's 10,000 of uninsured dollars. This gets more confusing with a joint account. This example is very confusing. Make sure, I'm going to link this in the show notes in the description here so you can actually go there and read some of the text because it's confusing. But in this example, Mary and John Smith have 230 grand in a money market account. They also have 250 in a savings account. And then Mary or John or Robert Smith own a CD that has 270 grand in. Wonder who Robert is. We're going to say Robert's child. Okay. So here's how that works. Even though that total 750 grand, if you break it down per depositor, 330 is what Mary has. So she's got 80 grand that's uninsured in this scenario, even though the total is just 750. And you'd think, well, there should be 750 of coverage. There's three different people. No, she's got 80 grand that's uninsured. John has 80 grand that's uninsured. And the portion that's Robert's is fully covered. So you want to know these rules? They're complicated. Work with your certified financial planner. They'll understand these rules, help you apply them in your situation. And even the FDIC website has, I don't know, I can't remember the acronym, but it has a calculator where you can input your information. What could you do in these situations to get around it? You could have at the same bank, you could utilize multiple ownership groups. So have single account and joint account, but this gets tricky with beneficiaries and estate planning. You could have accounts at different banks. That's what most people do to solve this. And so working with your certified financial planner, developing the right strategy to ensure you've got the right FDIC insurance coverage and you're fully protected. Okay, so what's changed then? If that's how it works, what's changed? Well, I haven't mentioned the category, the ownership group of a trust. If you own a trust, your rules may have changed. It used to be that you had each beneficiary of that trust, each individual who had an interest in that trust. So each beneficiary had up to $250,000 of coverage. So let's say there's the Bernard Trust, and there's 6 beneficiaries to that. Then each of those 6 previous rules would have $250,000 of coverage. Now that is still the case, but it caps. There is a cap to the FDIC insurance limit at $1,250,000. So if you have less than, if you have 5 or fewer beneficiaries to your trust, then no change, no issue. If you have 6 or more, the limit is now $1.25 million in total FDIC insurance limit, and you might be now uninsured. If you've got multiple, if you have that many beneficiaries to your trust, it's possible that you do have a larger trust, and this could impact you. So you need to be aware of these rules. So, like I said, small change, and it's only going to impact a few people. But if you're in that group, you need to be aware. You need to kind of look through and say, well, do I have an issue here? Do I need to make some adjustments? And if you're not in that group, you could be. So understanding these rules. It's very interesting they're making these changes because there's been this ongoing debate over the past year that FDIC insurance limits are out of date. They haven't changed them in a long time. And in fact, some of the large bank failures, FDIC even came out and there was a lot of people pushing for full coverage, no limit. Very interesting that a year later, we're not out of the woods and they're imposing a newer limit, even though it's quite higher. So flies in the face of that. What do you do with this information? Number one, if you have a trust and you have above these limits, this could impact you, and you want to work with your certified financial planner, lay out what the right strategy is so that you can ensure that your trust gets full FDIC insurance protection. That's number one. Number two, if you don't have a trust, but you've got dollars at the bank, a lot of dollars at the bank, work through with your CFP to ensure that you are also staying within these confusing rules so that you've got every dollar FDIC insurance covered and have the maximum amount of protection. And finally, number three, if you have any money at all in the bank, you want to make sure that you're getting a competitive, an appropriate amount of interest on your money. Right now, because of high inflation, interest rates have increased, and therefore you should be getting more interest on your money in the bank. Checking accounts typically don't pay interest. Savings accounts, though, are typically not keeping up with the actual interest rate environment. So you need to get more creative. Should you be using a money market account? Should you be using an online money market account? Should you consider a CD? What are the restrictions and limitations with that CD? So kind of third action item has nothing to do with FDIC insurance, but it is about, well, how can you make sure that you're getting the most income, the most interest on the resources that you do have at the bank, whether large or small. Work with your certified financial planner on that. Develop the right strategy. Get the right amount of FDIC insurance coverage so that you don't have any risk with dollars that should be low risk, no risk. Work with your CFP on that. If you don't have a CFP on your team, contact one of my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or send us an email, info@Korhorn.com. All right, there you have it. Go out and take your next wise step in your financial life.